Yo guys, what's up? Can you guys hear me? Uh, cool. All right, yeah, there's a bit of a delay, that's why. But okay, we're gonna go ahead and get it started. No plan, no no nothing. We're just gonna do random shit, basically. We'll do Q&A stuff a little bit later. We'll do that at the end. Um, so yeah, I guess I'll just talk a little bit about Bitcoin, maybe some altcoins if you guys want to. Yeah, nothing planned though. Um, First off, I want to do a disclaimer that the charts that you guys are going to see are not the charts that I'm actually trading with. They're just similar versions of what I would use, but I'm not going to show the public the exact version of what I use. So that's the obligatory preface. So with that, things like where support and resistance are drawn on this chart might not even be real lines anymore, just because I don't update this chart book very often. It's just something I use for this type of public type of thing. Anyways, um, yeah, Bitcoin's been crazy, right, guys? I got stopped on my short yesterday, which kind of sucks. I woke up, and yeah, I guess we'll talk about that price action because that was pretty anomalous what we saw yesterday, in my opinion. I woke up, the short plan was playing out perfectly, it seems. I moved my stop down. I went and did some things. I came back and got fucking clapped by that move. So I got slipped pretty badly on it too, to be honest. So it kind of sucks, but it's just how she goes. It's a pretty obvious level to be fading. So um, it's just the risk you take. So I'll go through some questions here, I guess, before we talk about that actual price action that developed. Where do I see Bitcoin going from here? Well, probably up. I mean, there's like basically two or three scenarios that could play out from here. One, the scenario that the bulls, like if you're bullish at all, this is what you hope for, assuming you're not fully in position at the range highs. We want to pull back to like mid-range, so give us a pullback to like 35 or 36, and that's a pretty logical area to bid. I'll almost certainly bid that unless there is something that to tell me in the moment that to be suspect of it. So yeah, on the chart here, give us a pullback to the mid-range. Because if you look at the macro, which I guess we could do on the TPO. So weekly TPO, guys. Let me zoom in. Okay, so you can see the whole macro range that we've been in here. Um, Pretty obvious. What I mean, you don't even need to look at price action, right? We see mid-range is right here, right? I mean, you see an upper distribution or lower distribution. This is the mid-range. So if we got to pull back to here, I would bid it probably. Um, that is definitely a potential setup I'm looking for. Bid mid range for continuation up to like 45-ish maybe. Um, we could also just outright accept over 40k, so we could just start chopping over 40k. And the longer we spend over 40k, the more likely you're going to want to just be bidding it. That's option two. Option three is we're at the range highs right now. Range highs fail, and we go back to range lows. So from the range high, we could go to mid range or the low from here. I'm flat on derivs, and I do have some Bitcoin, some spot, but I mean nothing that really matters that much. If we get another leg up to like 44 or 45, I'll probably try to hedge my holdings again, just to see. But yeah, there's basically three or four obvious like macro plays. We just break out of the range from here. We go back to mid-range and go up. could go back to mid-range and keep going down. I guess those are the three options. Go through some questions here. Yeah, 44K is definitely, as Vlad says here, 44K is definitely an area that could be the turning point. I'm not super convinced just yet. You can't fade the spot bid has been pretty relentless. It definitely picked up like mid-range, really heavy, and then obviously the move that got us to the range high was not spots. That was purely derivative driven, because we had such a big liquidation event um, on Nance. But what I'm getting at is, this whole range has been one of the toughest to have a high time frame outlook. This range is probably the most disputed range I've seen amongst my peers, right? Where there isn't some sort of kind of unanimous um, bias, right? When we were in the 50K distribution, like all my friends were fucking bears up there. Nobody was bullish up there. And here in this range, it's just completely neutral. I just have lots of bulls and lots of bears for friends, so you can't really read into anything on the sentiment. So I mean, yeah, you really got to go with your gut on your own here in these situations because nobody fucking knows the answer. The only person that might know the answer, maybe, is Alameda because they're quite literally running the market right now. They definitely noticeably took over. Um, which on that note, I'd say that they basically, this is just my opinion, there's nothing to back it, but since there was such weakness and such lack of activity during this period, basically once they recognized that the forced selling had dwindled, they recognized that it's going to cost us X amount to make Y, and it was a simple business decision. They spent the money to mark the market up, and they probably made stupid money on the process. Does this guy know what he's talking about? No, I don't have a clue. You should just go ahead and leave now. So how do you hedge your spot? You either use options or futures. So I'd recommend futures to people because it's just a more simple concept. Basically, you're gonna go and look for either a futures you're gonna look for the easiest one's probably a perpetual contract because if you can get the funding to be in your favor. So if the funding is in your favor, you can short on a perpetual contract um, and be patient with it. Uh, Alternatively, the main way that I hedge is just with long dated futures. So like right now we have a September contract and we have a December contract, and some exchanges are probably coming out with March of 2022 now. If they haven't come out with that, it'll be soon. So those are the contracts you can use. I'm generally going to use December. I've been using December for a while now, so yeah, I'll just use December. Guess I'll show this chart real quick. This is what I'm using. This is my futures chart that I use to watch all the markets that matter. So at the bottom, we'll have the perpetual contracts, and then the black is spot, and then all the other tickers are going to be um, your alternative futures contracts. So they're going to be the 3 months and the 6 month. Yeah, I'll keep this recorded probably. But yeah, I mean, I wouldn't complicate the process of hedging or straddling any more than just you're long via spot and you want to reduce your risk at resistance levels. Don't get too carried away with hedging. The mindset you should have, in my opinion, with hedging is that you're essentially have a predetermined amount of like, risk that you're going to put on with the short or the hedge rather, which the purpose is just to protect you from downside. So think about it like this: in that hedging of a long scenario, you're going to short and you're basically going to risk, maybe 1 to 3% of that futures account to protect yourself. So it's like it's the same thing with options premiums where you just pay you in your mind you should have that fee or that potential loss already calculated, and does it make sense for me to risk 3% at this resistance to protect my spot bag? And I mean, those are the kind of questions you should ask yourself with this stuff. And more often than not, the answer is probably going to be yes when you're at a legitimate resistance level and you have a spot position that's actually worth protecting. I'm not talking about your zero point 0.1 Bitcoin, but if you have a couple corn and you bought them at 30K and all of a sudden you're up 10K a coin, you probably don't want to give that money back. So yeah. So something I wanted to go over in this was this price action that we actually got yesterday because I tweeted about it. Because it looked like, come on, fucker. It looked like we were getting a really, really textbook setup for the Bears, and we got absolutely fucking. I mean, people on my side got absolutely scammed by this move. So normally when you have overlapping value, right, and the third day was within that same area. When you have volume come in and you mark down from it, which there was a lot of volume on this move on both spot and derivatives, when you have a lot of volume come in and you break directionally from a range like that, you're normally going to see continuation. It was very odd to me that this type of structure makes all the sense in the world, right? From a textbook standpoint, you want to see your range, you want to break down from your range, you want to come up to the range low, test it, fail, break down further if you're a bear. That's what was expected to happen. But instead, we just fucking yeeted right back through. And not only did we go through the obvious resistance, but we went through the range completely. We just cut through it like butter, and now we're trading above it, forming a new distribution. So that was an odd scenario that we saw play out. Certainly caught me off guard, and I lost. I took an L because of it. It's just how, I'm not crying over it or anything. It's just how it goes. But it was just very, very odd because I definitely thought I was in the clear once we were in this consolidation area. So I tweeted about that the other day without explaining it at all. So I hope that explains. I guess just do a quick little summarization real quick that, when you have the overlapping value, multiple days of overlapping value, when you get a directional break, you expect it to keep going that way. So this is very odd. And basically, this kind of tells me that one of the main driving forces in the market right now is a distortion from large participants, right? Like to me, this something like this doesn't occur without intervention from a large market participant. So when I see this, I think that like I don't want to like meme and say it's Sam, but like I see this and think that like somebody with money and power said fuck you to everybody else basically because yeah, I mean it just shouldn't have broken. It just shouldn't have popped back up like that. So somebody stepped in, so some entity. I hate to sound like a conspiracy theorist or something because that's pretty fucking cheesy, but I hope you guys get my point here. Market conditions have changed? Yeah, I mean, they no doubt have changed. They've changed over the past couple months in many ways, right? We've changed from, uh, you know, a spot-driven rally to now we're definitely in like a micro trend, right? On like a daily time frame or like a 4 hour time frame or some shit like that. We're obviously in a trend up to the range, but like macro, we're still in a range. Um, yeah, I'd say over 42. I'd say that we're probably um, actually breaking the range by then. But basically, we're at the range high. Yeah, Sam is definitely a big part of it. We all saw him on the tape. I mean, the spot buys that they were putting through, honestly, the spot and perpetual buys that FTX was putting through on some of these legs up were pretty crazy. So yeah, I mean that is a piece of advice for you guys. I'd say pay attention to FTX flow. Look at their open interest. Um, FTX has been gaining a lot of open interest. So yeah, I guess some other market dynamics that are changing out, right? Like there's obviously less leverage in the system right now, which is probably a trend that's going to continue. Um, yeah, definitely less leverage. We have noticeably moved towards. I mean, I'm sure you guys have seen the takes on Twitter about how we've moved very heavily towards stablecoin collateralization. That's a trend that I don't see stopping anytime soon, and you even see it rippling out into other exchanges. It was definitely only the Binance Perpetual that was the case for at the beginning. That you saw a massive open interest increase in the Tether collateralization, but now I'm not going to tell you the exchanges to make you guys look for it because it's really not that hard. But a lot of other major perpetual exchanges having that similar trend where the Bitcoin collateralized um, contracts are becoming less popular. And yeah, I'm not going to state this as this it's my thought because it's not. But I do think that definitely changes the market dynamic. That for years the main collateralization option was to use Bitcoin as collateral, and that meant that sell-offs were far more painful for market participants than marks up, right? Because of the convexity, right? You guys have probably heard this concept that right when you use Bitcoin as collateral and then you go long, you're long spot and you're long derivative. But when you're only long via tether, you're just naked short. So yeah, okay. Yeah, Bybit definitely has a big rotation in USDT. I didn't want to say it outright, but somebody else did it for you guys. It's very noticeable. It's not. I would say that they've probably their tether contract has probably increased something like 200 million in the past 2 weeks. Last time I looked at it, so it's definitely noteworthy. I'm not. I see somebody asking like where I put my stop. I'm not going to tell you that. Also, it was like a laziness. It was actually a poor play from me. I actually and I looked at everything and thought I'm in the clear. I'm going to drop my stop down, and it was a good thing in the sense that I am not holding a short underwater right now, but it could have been managed better. I'll put it that way. I shouldn't have just. It's a bad habit of mine that I will be confident when the price moves in my direction, and then I will ignore that position and go and focus on other things. And sometimes you come back and you get fucked because of that. So, so I have a question here about aiming to gain stats or gain dollars. Dollars, 100%. Um, I don't care about having a lot of Bitcoin anymore. I don't think that really matters. I can always here's how I look at it, right? Clearly, the world cares more about dollars than bitcoins, and that's probably always going to be the case. That I hope nobody in my chat thinks that Bitcoin's going to replace the dollar. The governments will never allow for that. They'll put their own currency in place before that. So I mean, on the macro things, I mean, here's how I'll word it. I'm confident that I can trade Bitcoin collateralized contracts and gain Bitcoin doing so if I felt like I needed to have more Bitcoin. But yeah, I think it's wise to care more about dollars. And here's how I'll put it too: is that you should care more about your Bitcoin holding versus your dollar holding, depending on where you're at in the trend. So during the undisputable bull market that we had, you needed to care. It made more sense to care about your Bitcoin holding because um, if you're losing Bitcoin value while the market's going up, it means you're underperforming. You can think about it like Bitcoin should be looked at as it's crypto's index is how I would describe it. So if you're a legacy market trader and the S&P is outperforming you, you're fucking up. It's the same thing with crypto. If you're a crypto trader and Bitcoin's outperforming you, you're making a mistake. You should have just been long Bitcoin, or with legacy, you just should have been long the S&P instead of trying to outtrade it. So that's a great way to track your performance because it's very easy to look at your performance and the numbers and have maybe a bit of a skewed reference on how well you're doing when you're tracking things in Bitcoin. Or only one or the other when you word it like that. If you're only looking at dollars, you might not realize that Bitcoin's vastly outperforming you. And if you're only looking at Bitcoin, you might not realize that you're getting shit on in dollars. Because you could be theoretically gaining Bitcoin and losing dollars and vice versa. So I say it definitely is relevant to the trend. When you're in a bullish trend, it makes I understand the argument of caring about Bitcoin value. But now, because we're not in a clearly defined trend anymore, this could be the start of a trend. I'm not going to sit here and say definitively one way or the other, but it hasn't proven itself yet. It's not, there's still, you can still make the arguments against it. So until you can't make the argument anymore about whether we're trending or not. I wouldn't care about that personally. Yeah, what Christ said, that theoretically everybody being long via tether could make people FOMO back into their spot positions. Um, the thing is, though, that in order to make people FOMO, people that matter, right, not plebs are going to be buying 0.05 Bitcoin. So if you want people to actually start TWAPing in massive size, the trend has to be obvious, which goes back to my point that I just made. I can't imagine a larger participant just yeeting in now. If they are, they're doing it incrementally. Nobody's going to just full stack yeet right now. You'd have to be um, pretty low IQ for that one. Unless there's some sort of asymmetrical information that you have, I guess it's a caveat there. Somebody out there in the world has information that nobody else has, and maybe that person can act on that information. Okay, guys. No more questions over there. So, yeah, let's see. I guess pretty obvious potential setup is to come back. I guess the one really bullish setup that I left out is bidding the previous range high. So we could see us come back to here, and this could be the bid for continuation. So we'll see. The color divergences on my CVD is not something that is built into Sierra. I wouldn't worry about it either. It's not really relevant. Because the difference is that those are showing actual delta divergences, which are different from CVD divergences. Um, I've never made a trade decision based off of a delta divergence in my life. A cumulative volume divergence is different than a delta divergence. We can talk about that some other time. But yeah, CVD divergences are super actionable. I'd say similarly to any type of divergence that people are going to use, it's more of a bias signal and less of an entry. So if you see a CVD div, it doesn't mean you want to get in position right now necessarily. It more so means that it'll help you with the bias that we're going to reverse trend on the low time frame when you see those. But yeah, CVD divs are spicy. Yeah, so let's see. Do I take advantage of tight invalidations? Um, Not really, because how I scalp, um, I'm never really like I said this on Jim's stream the other day that I said that nobody was going to understand or they were going to make fun of it in the moment because it's a weird concept. But I don't really know I'm wrong when I get out of a trade, right? So um, when I'm going to de-risk a scalp, it's because I feel that I'm wrong. It's not because I've been proven wrong yet. That doesn't ever really happen. And if it does, it's because I was lazy, like with my swing short that I just talked about. I kind of didn't manage it properly. I could have done a much better job managing it, and as a result, I got hard stopped and lost more than I needed to. So if I'm a scalper, I'm not going to fade a level and then like say I'm wrong if price goes down 2% from here. I'm it's difficult to word because basically I'm not you're never with how I scalp, you're never really wrong. It just means you were early. So more so what I'm going to be doing is like de-risking the position with the intention of taking the same exact trade with a better entry. That's how I'll word it, right? Because um, with how I scalp, I don't want to sound like overly cocky here or anything, but my system is good. I'm not going to be wrong on scalps very often. More 99% of the time when I'm wrong on a trade, it's not that my system was wrong; it's that I'm wrong, that I made a mistake as a human being. So yeah, I hope that helps. I don't. So yeah, I mean, don't wait to get stopped. Early on, it's not a bad idea to wait until you get stopped. But as you get more experienced, try to cut scalps before they actually hurt you. In worst case scenario, you cut a scalp and it ends up playing out perfectly, and you maybe take a paper cut loss. But it's a good habit to just when you feel like things aren't right to just either size it down or just cut it entirely. It's very good practice to have. I like that somebody's telling me I'm providing terrible advice for telling people to hold a depreciating asset long term. I'm assuming we're talking about dollars because I'm saying that I would aim to make dollars more. I don't even know how to respond to that. Just because I want to accrue dollars in my working doesn't mean I just hold dollars. I mean, I'm not irresponsible. I have a very small. Actually, I take that back. Nowadays, I have far too much of my money in dollars after de-risking this trend. And it's a very difficult thing to deal with, actually. That like, let's say you do really well this year, you make $100,000 and you have $100,000 in cash. You're not really sure what to buy. You're not really sure where to put it. These are actually pretty real obstacles when you hold cash. Which my advice would be to um, look for yield in crypto. So that's what I do with my dollars. I'm still not that great at it, but I definitely probably know more than the average person nowadays, I'd say, with yield farming. All right, going through some questions. Do I work with TradingView? I mean, I use TradingView. I don't work with them or anything. It's one of my TradingView setups that I use. I will I will use this for scalping Bitcoin. It's a 1 minute chart. Nothing crazy with it. I primarily use this for getting clean entries and exits. So I mean, I guess a little alpha for the stream. What I'm gonna get a setup through Sierra, and then when I'm actually looking to when to buy and when to sell, when to actually get in, I'll look at something like this. Along with something else, which I'm not going to show you guys. But the reasoning for that is that the lower time frame and the higher frequency you trade, the more precise your entries and exits have to be. So really getting in, really entering in on the extremes, right? So really buying here and selling here. I know it's easy in hindsight, and that's not what I'm not trying to do hindsight analysis, but I'm saying that like that's the logic of what I would use this for to help me get um, as close to the extreme as possible for my fills. Because the difference in you shorting at 41.5 and 41.3 might be a big difference actually on a scalp. Actually, it 100% does. So yeah, I use TradingView. TradingView is great for the quick scans and stuff, right? So the ultimate downside to Sierra is that it's slow to set charts up. When I decide, like, 2 weeks ago, I was scalping axes a lot, and it takes me like 30 minutes plus to set up a Sierra setup to trade axes. So it's inconvenient. So for that reason alone, I'll often use Sierra or excuse me, TradingView for a lot of the quicker stuff. Correlation with funding rates. I mean, definitely. I wouldn't. I would caution people to trade off of these kind of signals because just like the divergence thing that I said, um, it can, funding can go against the logic for a long time before it has some sort of um, reversion. So I would say with funding is that, I mean, funding is useful for seeing how much leverage is in the system. That in combination with the market cap open interest ratio, with those two tools, you can kind of see how much leverage there is. Pretty pretty obvious, right? When you're going up, you don't want leverage to be high, or because that means that it's derivatives. They're pushing price up if leverage is high when price goes up. And that was a big lesson for me this cycle. There was a couple of points where I could have saved myself from some pain. And in hindsight, the signals were obvious about paying attention to what I just said. And in the future, I will do a better job paying attention to those things. So somebody asking if this would be a bull trap. I mean, you can't really say for sure because it won't be obvious one way or the other until after um, price breaks directionally, right? It'll be obviously a bull trap if price breaks down to 37K today, and then you'll be obviously it was a bull trap. But in real time, you can't really tell apart from looking at the flow. But the difficulties with this is that for like back in the day, we used to only really have to watch maybe one or two exchanges. You could pretty much watch BitMEX alone for a very long time, and whatever BitMEX did was what the market was going to do. Nowadays, it's not the case anymore. There's several derivative exchanges that are relevant. There's several spot exchanges that are relevant. So flow trading has gotten a lot harder. Moral of the story. 2 years ago, if you saw a trap trader on BitMEX, you fucking aped into it, and you had all the confidence in the world. And sometimes there might be a trap trader on MEX today, but FTX decides that they're gonna fucking unload 50 million in 10 mil spot clips into resistance, and they're gonna say fuck you. I mean, so yeah, there's a lot more nuance in the market with flow nowadays than ever before, and that trend is only going to continue as the market matures and there's more. I guess like the multi-exchange relevance thing will probably fade, which will be nice. It'll be really nice when you don't have to worry about 10 different exchanges flow. I'm hoping what I'm saying to you guys makes any sense at all. People asking about the indicators. It's a perfect segue into something I like to say. I think it's foolish for people to ask for other people's indicators and settings and things like that because ultimately they don't matter. Um, all that matters with your indicators, so like a moving average or a band, for instance, right? Because that's you guys are looking at my bands and you want to know what they are. Oh, maybe you guys were talking about the oscillator. You guys didn't specify. But the oscillator is just showing premium between spot and perpetuals. Nothing crazy there. But it doesn't. Literally every band that's ever been created in existence is all going to do the same fucking thing. What you need to do is pick a band that you like and then change the settings over and over again until it fits price perfectly, or as perfect as you're going to get it. That should be your goal, to tune a band to fit price as best possible. And then it becomes very actionable once you've done so. Question about a single print. So it's another good topic to go over. You see a lot of talk about these things nowadays because profile is clearly a flavor of the month right now. Everybody that's newer seems to be interested in it for whatever reason. Not going to sell you on the dream that it's going to help you. It may or it may not. I'm not going to try to blow smoke up anybody's ass and tell them it's the end all be all. But with singles, I would say it's a great opening for me to talk about how anomalies within TPO are overgeneralized by the public, that not every single is the same and not every poor high, poor low is the same. You got to think about the context of what they mean in the moment. So, tails, for instance, and singles are ultimately going to be the same thing. The difference is that singles take place within the distribution and tails take place at the extremes. So tail and single. What singles are showing you is there's an absence of two-way trade. So when we break open this day, we can see that right here, during that day, this is the only point that we traded through that day, which should be something like here. The only time in the day that we traded through is right there. And what you should take away from that is it's showing you initiation. Single prints are showing you that buyers or sellers are overwhelming the other side and that there is an absence of two-way trade. So what two-way trade looks like is the back and forth. What this is, the healthy or price action that we're familiar with, where there's an agreement between buyers and sellers, right? For this period of time, buyers and sellers agreed that this was expensive and this was cheap. And that changed in this moment. The buyers, where they were previously were saying was too expensive, said it's not too expensive anymore. We're now willing to buy. I hope that helped to some degree. But yes, singles represent initiation. So really internalize that concept. And the same thing with the tails. So they're going to represent initiation. That when price tried to, this isn't a good example because of this, but like, let me see if we can find a better one. Okay, perfect, right here. That price made a single, or a tail rather, and the seller said that this is too high, right? And the buyer said it's too high. What happens? We go down. So it shows that the seller is initiated from here. Overgeneralizing, because the original point that I made, right, is that there's a lot of nuance between these things, and you got to be aware of that. So to summarize that, not every single is the same, not every poor high, poor low is the same. So I assume that there's going to always be a lot of questions about how do you scalp. This chart, I mean, these charts should give you a good idea because these are very, very close to what I'm using. Not identical by any means. There's a couple important things missing from here, but I mean, this is what I'm using. Getting bias, looking at price action, and looking at the flow. That's all you really need. I'll elaborate on that kind of stuff as time goes on. The trick is, and I'm sure you guys already understand this because you've heard other people speak about it, you have to be very careful in my position how I word these things because if I just casually start rambling, I might say things that I'm not supposed to say by accident. So the scalping stuff will More specifics with scalping will come as I have worked out how to properly word things. Okay. Struggle to understand delta and delta imbalance. Well, um, okay. How to word it. Um, okay, so delta to start. The summary of or the definition of delta is the net difference between buys and sells. Um, Aggressive buys and sells, that is. So it's gonna, delta is gonna show you like right here. We can see that for this tick at this price point, that the net difference between buying and selling was 1.07 million. The total volume on the candle was 4.37. So we can see that for this price point, that there was a million more buying and selling. And what an imbalance is within that is when you have um, an imbalance is when you have a distortion where there is one side is missing essentially. So if I turn this to bid ask, we could see them. I don't really trade off of them, to be honest, right? I'm not paying attention to the imbalances like that. I'm just more so just paying attention to where the delta comes in at, where because what this shows us is that as buyers bought into the POC, that the passive sellers absorbed them. So that's what you're seeing here. So I don't really pay attention to the imbalance, but what an imbalance is, if you turn this to bid ask, right, you might see some zeros on the ask. And that's what that would be, right? So if you saw 3 zeros on the ask and then some really large bids, that would be an imbalance. Trading things like imbalance would be on the lowest of time frames and like the highest of frequencies, I'd say. And I'd also like to make the point that I don't really see that kind of stuff as being feasible in crypto for most people. That style of trading is going to be most effective in legacy futures, um, because my opinion has been that my experience has been that you can't trade solely off flow anymore in crypto. Um, you can if you're just a tick scalper or something, you can get away with it, but it's difficult. And I would say that the most likely setup that you're going to have some success with is um, having more simple triggers for when to have a bias, and then using the flow to support that bias. Somebody asking where you can learn about these charts. My YouTube. I this same channel that's being streamed from right now has enough content to get you started. I'll have a lot more stuff coming out eventually, but I'm just putting a lot of effort into making sure everything is to the standard of quality that I've set forth. So more questions about scalping. I'll do that some other time. I'll do live scalping for people eventually. This was just the purpose of this stream, was just to make sure everything worked. I wanted to make sure the sound worked and everything. That's really all that I care. And also getting comfortable with tabbing around without showing the wrong screens. You guys gotta understand that that's nerve-wracking for us. That I don't want to show a screen that shows accounts or shows personal information or anything like that. So that's always a worry. But Joel is asking about walking through a scalping setup. You just recognize when you're at the extremes and fade. That's what most scalping is. Question about scaling. That's a pretty good question. How to word it? Let's see. It comes into how somebody does something on their own. So I got to go back to what I said earlier. How I scalp is that I'm not wrong when price goes against me. I'm just early. 99% of the time, maybe 95% of the time, when price goes against me, it just means that I'm just early, and then I just need to be more patient and get a better entry. That's what that means. So with that, right, when I get let's say I got a long signal 5 minutes ago, what I'm gonna do is, based off the setup, I have specific position sizes that are going to go through. If it's a setup of this quality, it's going to have this size, and if it's a setup of this quality, I have this size recorded. And then I use my discretion to add to that, because that's like a generic script, and then I use my gut to know when I should go bigger or when to go smaller on top of that. So what that would be is like you get a long signal, and let's say you want to scalp with half a Bitcoin. Maybe I'm going to mark it in zero point 0.2 Bitcoin right now with the potential of adding up to 0.5 total. So before you know, like you get a long signal, but you don't know if you're not super confident yet, but this could be the time to start being long. So you're going to add in a small position size to start. And then you have to deal with the scenario of, if price goes with me or price goes against me, what am I going to do? And yeah, I mean, I found scale trading to be the most effective way by far for doing that, because we've all heard the cliche expression that losers add to losers and winners add to winners. It's the same thing with scalping. It's just a little more difficult because these time frames are very, very quick. But I'm gonna add to my positions when I'm confident that I'm right, and that constant in and out is very important. And with that, I'll add that something else I said on Jim's stream that probably most people didn't really internalize how useful this concept is, but you use a slightly higher time frame trade signal, like an intraday trade signal. So the kind of trade that you would hold for 6 hours, you use that logic for the bias of how you scalp. So when you get a trade signal that might take, it's a long that theoretically is going to take the rest of the day to play out probably, now all my scalps are long biased the rest of the day. So I think I explained it as well as I could. It's a very, very powerful way of establishing a trade thesis. I don't think market profile is enough to trade successfully. I've said this a bunch of times now in on streams and in groups and stuff, that it's the same thing as trying, I love the mathematics example. If you go to university and try to do calculus 3 without ever having built up the base understanding of math, you will fail. Like the chances that you succeed are so slim. So before you ever touch any of these things I can teach, you need to make sure that you have a solid base understanding of the fundamentals of TA. You need to have a very good understanding of what market structure and basic price action is, because those concepts are the bedrock of what the more complicated, flashy things that you see someone like me showing you are built on. So imagine building a house without a foundation. It's essentially what I'm watching people do. Your house might hold up for a couple of years, but as soon as as soon as something comes in nature, right? Maybe an earthquake, which if we want to get all smart with it, maybe that earthquake represents a market shift or an environment change, and you're fucked. So yeah, don't fuck around with that. Make sure that you put in the effort to have a good understanding of the basics. And then these things that I will teach you are very, very good supplementary things to build on top of it, because it's great and all to see market structure, right? Like over here we can see a 5-minute market structure. We're trending lower on 5-minute. But it's also really useful when you see the buying and selling within these candles, right? To actually see where the buying in the candle was, where the selling in the candle was, right? If you're a bear, you want to see the buying in the high of the candle. So, anyways. Um, Tape reading at some point. Let's see. I don't really think tape reading is a great idea for most people, especially with the way the agar is set up and stuff, that more often than not, that's probably going to end up fucking you, because you're going to end up becoming a casino, gamer at that point. So I'm not saying that tape reading isn't effective, But honestly, more often than not, what I'm using the tape for is just it's just funny to me to see some guy ape in 20 million at resistance. Like I don't really use that much because anything that actually matters in the tape is going to be recorded in the footprint. And I used to trade purely off of tape and depth of market. I had like maybe a 6 month stint where I only traded off that, and there was a period in time where that was pretty effective, but it's not anymore. So that adaptability, right? All these things that we're talking about here, they don't just work forever, and some tools are going to be um, more useful at other moments in time. So you got to be able to adapt. Yes, taking a position too early is the downfall of a lot of traders. This is definitely true because most people can figure out the directional bias, right? Most people can figure out that over the next 6 months, this asset's probably going to go down or this asset's probably going to go up. That kind of stuff's not that hard actually, but timing it's very difficult, and that's where the scale trading kind of comes in because, like for example, a lot of the time when I take, you know, directional swing trades, the positions are built up over days or weeks, and what that does for me is that when I'm wrong, when I'm wrong, I normally find out I'm wrong before I'm full size, and this helps me to not take unnecessary losses, right? Because if you're only half size and you find out you're wrong, it's a lot better than finding out when you're full size. The basics for me are what I just said, right? You need to have a good understanding of price action and market structure. Without, the core thing you have to understand is the whole a trend is higher highs or lower lows, and within a range you have neither of those consecutively at least. So yeah, market structure. Yeah, so I think 25 Second has asked this twice now. You can look at my YouTube channel. You can look at Abe Trade. His blog is very good. Um, there's a lot of paid content out there as well. Definitely recommend people start looking at the free content for two reasons. A, make sure that it's something you care about before you spend money on it. And B, it's also really good before you do some sort of paid content around these kind of things to have a base knowledge. So um, it's useful that you know what a lot of maybe some of the basics and what the terminology is, because when you go in and take their course, you're going to understand what they're telling you much easier if you've already done some of the legwork, right? So, for example, if you want to learn profile, you want to learn what all the basics of profile is. You want to learn what value area high, low is, point of control, all that basic terminology, and then go and take somebody's course because you're going to learn it faster. If you have to learn what the jargon is at the time, it's gonna be a lot more of a struggle um, to get those things down. Let's see what else we got here. Okay, somebody asking me about adding to losers. So it's all based off where you're at within your own growth cycle as a trader. Generally speaking, adding to losers is a bad idea. If you have high conviction in something, then you can do it. But when you're wrong in those scenarios, those are going to be the most painful losses in your life when you add to losers and end up being wrong. So the reason why I can't definitively say don't do it is because I have added to losers on a swing basis before, and it's worked out really well for me. But the thing is that I had, that kind of decision isn't based off of the chart. That type of decision is based off of like a macro thesis. Um, so my real life example with this, probably the time I've averaged into a loser the most was with DeFi. After DeFi summer, I started averaging in like September, October, and then maybe like went really hard in December. But at the beginning, when I started buying the DeFi coins, they were going down still, and I just was an idiot and dollar cost average into them basically, which I got lucky. It worked out for me. But I don't really recommend that style of trading for most people because you're gonna end up getting your fucking accounts wiped that way. I went into it like knowing that if I'm wrong here, I'm gonna lose a lot of money. So yeah, I wouldn't really strongly recommend anybody trade like that unless your conviction is massive. There was nothing that was gonna stop me from being long DeFi then, basically. Manage fees. How do you manage fees? I closed a profitable scalp and it was negative many times. So I don't know where you trade or how you're trading, but I don't remember what. I used to have a rule back when Bitcoin was like $8,000 about how price needed to move X amount for me to be able to market in and market out. Now back at like 9,000, $8,000 or $9,000, that was a $16 move I needed on Bitcoin on BitMEX to be able to market in, market out, and be break even. That number is obviously much higher now. I would guess that you need something like, I'm just guessing, but I would guess you need something like an $80 to $100 move to be able to market in, market out. So how you lessen that pain is A, you don't scalp for 80-point moves. I'm not looking for anything less than like 150 points. And also limit orders. If you're market it, market out, you're paying more than you have to. So my advice to people is market in, limit out. And the reason for that is that if you're on an ape exchange, this doesn't apply to you. But if you're on an exchange that has more professional participants, if you're getting filled on limit orders at extremes of value, you should be worried a little bit more because think about the fact that somebody intended to fill you when you're competing for fills against much more sophisticated participants. So it makes a lot more sense when you want to take your punt that you cross the spread and mark it in, and then you should be able to easily limit out. Very happy to have Stalin in the chat. Stalin's a Chad, by the way, guys. I remember watching Stan probably before he knew anything about Profile, and I had like heard of him, and I just saw this guy going hard on Twitter basically, and he learned very, very quickly. Very impressive. Felt like Patrick Bateman when I said that. Okay, so somebody's saying market in, market out is $40 on 100x. What? No way. 86 ticks. There we go. I just made up the number. So yeah, if your fees matter. So here's a great example. This is how like you guys that are newer don't realize how hard things used to be to scalp. When I first started to really hit my stride as a scalper, um, BitMEX was the only game. I think Bybit was a little bit relevant, but pretty much it was BitMEX only. Um, and the ranges that we traded were so tight that you had to limit in and limit out on both ends. Otherwise, you probably wouldn't make money. Because you had I think it was like 75 basis points that you would pay per market order, and the spreads that we were trading these micro ranges were so tight that if you marketed in and limited out, you barely made any money. So because of the way that the rebates work on MEX, where you actually are rewarded 25 basis points for filling a limit order over X amount of size. Really, the only way to profitably trade was to be doing mostly limit orders and basically only market orders when you were fucking up and had to. Yeah, I mean, Georgette, I kind of skipped your question because I didn't know what you were asking. You're saying you are not wrong as you scale your position when you're accumulating phase. I didn't really understand how to answer that question. That's why I skipped it. Hey, thanks for stopping by. Okay, guys, we'll probably close it up here pretty soon. Been live for like an hour. It went pretty well. If anybody has any other questions that they want to go over, I'm happy to do so. And then in the future, we'll do more organized stuff where we'll actually say next week it's going to be on this day, and then we'll have more specific subject matter to go over rather than. I mean, random is good too, because you guys get a chance to just ask whatever the fuck you want to ask, and I do my best to answer. Somebody's saying that Binance that. Oh, but that's specifically the Binance stablecoin has negative fees on limit orders. Their regular orders won't have that. You don't get rebates on Binance. Not on the Tether contracts at least. Trust me, I would know. Why BitMEX? Well, BitMEX has a specific type of participant, so I want to pay attention to them for a specific reason, right? So if I want to look at BitMEX because they seem to have a reasonable market participant than say somebody like Bybit. And as a result, you can lean into that bias a little bit more. Meaning when you see Bybit is aping into a resistance, you need to be a little more cautious than when you see BitMEX aping into a resistance. Yeah, okay, so what? Yeah, I think that sounds right, that you need to have a lot of BNB. That actually does sound right, that if you get to a certain monthly volume on Binance, you probably do get a rebate. Um, but, I mean, and I do a fair bit of volume myself, and I'm pretty sure I'm not close to that. Which, on that note, super random, but just feel obligated to make the point. People probably don't realize how much volume is you as a small trader actually do when you trade frequently. So go look at your account history and see what kind of volume you do over a month time span. You could be somebody that trades $1,000 position sizes, but if you're trading frequently, you might be surprised by how much volume you do. So with that, when you see somebody bragging about how they did 80 million monthly volume last, that means they're full of shit probably, because in reality doing 80 million monthly volume is actually not even high for a legitimate trader. Why not Coinbase? I was speaking specifically about derivatives when I said that. Coinbase obviously matters. Coinbase, as well as one or two other major spot exchanges, I'll pay attention to. But there's a big difference. You have to separate the concept between spot and derivatives because they're a completely different thing. And when one is buying and one is selling, when buying on perpetuals and buying on spot is not the same thing. It should not be treated the same way. I'll do no. I am not Stan's mentor. No. Um, gonna go ahead and cancel that one out real quick. Um, let's see. Stan, you're asking how they should do it? I've talked about that a little bit before. Oh, no? Okay, what? Just for the sake of playing devil's advocate with the whole group and community and mentor and things like that, there is a downside to it in that you could become a part of groupthink. So how I would word it is that no doubt it's going to expedite your learning curve and you can potentially avoid some common pitfalls and stuff. Um, However, you can easily get kind of stuck in the groupthink mindset or idolizing somebody else. And it doesn't matter who you are, you need to be an individual. And like with what Stahn's saying, like most of us got mentored in one way or another. Um, and those things are very useful, obviously, right? I wouldn't redo it. Very appreciative to the people that helped me. However, you want to transition to being very independent. Is what I was trying to get across, right? Like, if my mentor comes and tells me like, "Yo, I've got this idea," um, don't get me wrong, I might copy trade him. However, I'm not gonna blindly do it, right? So like, if my mentor comes and goes, "Yo, I got this swing play," I'm not gonna just copy trade him. Although his track record has proven that I should, but it's not in my nature to do so. But everything in life has pros and cons. So yes, also you could get fucked if you could learn from the wrong person, which is a very very real problem today on Twitter, as Stan is very well aware that you don't want to just learn profile from any random guy that's posting about it on Twitter right now because a lot of the people don't actually understand it properly. I'd say there's less than 10 accounts on Twitter that are worth learning from, and sadly, most of them don't post enough for you to even learn from them nowadays. Most of the people that I would say a couple years ago would have been worth learning from, they're not going to give you their time anymore. So you guys are kind of stuck in a rock and a hard place um, for who to learn from. So obviously, I'm going to show myself and say that I'm confident that you guys can learn from me because I don't think I'm going to mislead anybody. If I say something, I try not to say things definitively or in absolutes. And when I do, I'm pretty confident. So if I'm wrong, it's not that I ever misled anybody. I'm wrong because I actually misunderstood and was just wrong. Um, Anyways. Okay, any last second questions? What tick size are you using for profile? I change it a lot, and depending on what exchange I'm on, the tick size changes. So here's how I'll answer it: is that you want to be as low of a tick size as you can get away with, I think, because it's going to show you the most nuance within whatever you're looking at. So the lower the tick size, the more information it gives you, the more precise everything's going to be. But if you go too low, things can be difficult to see. So you should scale tick size up and down on anything, whether that was TPO or Renko or anything. You need to scale your tick size constantly as price moves. Right? The tick size that we used 2 years ago when Bitcoin was $8,000 is not the same tick size that we used at 60K. And when we were at 30K, I had to use a different tick size than when we were at 60. And now that we're up at 40, I had to change my tick size again. So there's no correct answer. You have to be dynamic with that stuff. I guess I can do like a tutorial on chart settings, but again, I really want to drive home the point that all that me telling you my chart settings today is going to do is give you chart settings for today. But as price develops, they won't work anymore because right, like this is a highly reflexive asset. We go up and down stupid amounts of money in short periods of time. It's the tick size today is not the tick size in 5 months. So you're going to have to figure out how to do it eventually anyways. But anyways, I think that's a good point for us to go ahead and close it out there. So thanks to everybody for showing up. I do appreciate it. And I'll do things more organized in the future where I will have a specific day similarly to how my friends do it. I'll have a set day, you know, we're going to do it on X day at this time frame so that everyone can be a little more organized with it. And we'll try to do more set topics as we move forward. But anyways, thanks guys, and we're going to close it out there.